so tonight we're looking at FAC1601. You've got the support material for the semester. Okay, so all the slides that I'm using, there's 10 slides in total. We'll obviously go through the assignment and we'll also go through past papers at a later stage. Okay, for now, I want to discuss a little bit of background about the business. Okay, so obviously, the Council for Higher Education asked Boston to choose between own degree or UNISA. Boston had to make a difficult decision to choose own degree over UNISA, and they couldn't offer both. And that's why I've decided to run this independently.
Why did the council say that?
Because Boston has their own degree, and they're also providing tuition for UNISA degree, which is separate.
Is that illegal?
Yeah, it was something that they're not allowing higher educational providers to do. So if Boston has their own degree, they must focus on their own degree. They can't offer support lectures for UNISA, unfortunately. Okay, so now Boston had to choose, and they've chosen Boston rather than UNISA. Okay. All right, so that's the mission statement and the values for my particular organization. And I'm focusing on the CS education, which is what you guys are doing in terms of the private support classes and tutor services. All right, so you guys have looked at signing up for the weekly support lectures. Okay, so what does that entail? Well, obviously the live interactive classes. Right, you guys have the customized support material, so you've got the file with all the notes for the semester. I will take you guys through worked examples, okay, example questions and examples to show you how this is done. Okay, I'm sure you're familiar with my technique in terms of how I present the accounting. It's very practical. You need to know how to do the calculations. It's not something you can study. Reading the textbook isn't going to help you to create those statements. You've got to physically create those statements. Right, I'm going to give you guys a minimum of 2 past papers covered from start to finish. We'll go through those together, and I've got more past papers in terms of solutions that I will give you guys as well. Okay, you guys have the 14 weeks, but I'm not limiting it to 14 weeks. Okay, if you guys are stuck and struggling with something, okay, we can arrange a time to either discuss it telephonically, via Skype, via WhatsApp, or if you want to, send a question via email. Okay, so this is the question I'm looking at. I'm struggling with this. Can you help me? Right, send it to me. I'll have a look at it. I'll respond either telephonically, Skype, or WhatsApp, or email, depending on how you've required. Okay, so even though we've only got the 14 weeks, 2 hours a week, right, this is extra. So at any point in terms of time or support that you're requiring, just let me know. Okay, we can arrange a time to discuss topics that you have problems with. Okay, I don't mind doing that at all. All right, and then those are the contact information, and we now need to look at this particular module. Okay, so FAC 1601 is a continuation of 1502. You would have received the study material from UNISA, so you would have gotten this. Okay. All right. If you haven't gotten the hard copy yet, the soft copy should be available online. All right.
Soft copy. Our company what's his name for us to print because it's quite a lot of pages.
Yeah, you don't have to print it, but maybe just use it on an iPad or a laptop or.
Read it on a
yeah, of course. All right, but that's what you'll be receiving from UNISA, as well as a tutorial letter. Okay, so we will be doing the tutorials in terms of assignments during the semester once we've covered the theory. Okay. All right, you do need to practice as much as possible, especially for an accounting exam. There is a volume 2 textbook that is prescribed for the for this course. If you are going to be studying accounting further, right, this is a really good resource to keep because it is covered right in more detail in other modules, okay, at a second, at a third year level, even honors level. Okay, so don't throw away the old textbooks. Okay, the one that you used last semester for 1502, that's very, very important. I'm going to run through key concepts today just to make sure all of you are comfortable with the theory before we introduce the new forms of ownership, right? Because you'll see in this module, you're focusing on the other forms of ownership. All right, are you going to need a financial calculator? If you've got one, great. You're not going to have to buy one, especially for one chapter in the textbook. Right, you'll see in the study guide, the final chapter, study unit 10, okay, is time value of money, right, which is basically a little fraction of DSC 1630. Okay, so you're going to be doing it this semester. Time value of money is going to be very easy here because it's just the basics. It's literally simple compound interest. That's it. Okay, a little bit of annuities. it is very basic. Alright, so you don't need a special financial calculator to do the workings. You can use the equations.
That financial calculator that you've got here, is that the one you...
That's the one that I've recommended. Yes, you've got HP or Sharp. Those are also options that you can consider.
So you're
Okay.
aware of how to...
Yes, I can work all three calculators. Okay, so the Casio I've just recommended. So this is for students that don't have a financial calculator who are looking at purchasing one. If I was you, I would try get hold of the Casio rather than HP or Sharp, right? Purely because it's easier to operate. It's the closest thing you'll have to a computer. Okay, it's got its own screen. You can press escape. You go out of a window and so on. It's very, very user friendly. Okay. You don't need to buy both. Okay, you just need one. So HP is 100% fine. Okay. All right. The assignments we spoke about, we'll do that later in the semester. Okay. Road to Success. You've seen this before in some of my previous lectures. You do need to try pre-read if you can. Okay. Purely because it is quite theoretical. I am going to discuss the theory. All right. If you can try pre-read, it always helps. Okay. Pre-reading helps in all modules. Okay. Try make notes. Okay, on the slide that you've been given, okay, there is space on the notes to make some additional points or jot down a few answers and so on, and ask any questions if you have. Okay, so I want to try to keep it as interactive as possible. So if you don't know how I'm getting a figure, let me know. Okay, let's go through it, let's discuss it. Let's look at the actual workings. Okay. All right, so to start off, all of this is a recap of 1502. Okay, so none of 1502 is covered anywhere in this textbook. Okay, you're not going to see things about depreciation. You're not going to see things about financial assets in terms of, let's say, a gain or a loss on a sale. Okay, or an increase or decrease in value. Okay, you're not going to see anything about property, plant, and equipment. You're not going to see anything about inventory in this textbook, which is the 1601 textbook. All of it is assumed knowledge from 1502, but you can't do any of the 1601 if you don't know your 1502. Okay, so I'm just mentioning that now because it's key that you go back and you revise, or you at least look at these notes, because I've put all the important bits and pieces here from 1502. 1502 is a long module, right? There were, I think, 17 or 18 chapters that you had to get through to write that exam. Okay, not all of it is tested here, but a lot of it gets carried through. Okay, so a credit allowance is something we'll recap today. Okay, you should have an idea of what a credit allowance is. You should have an idea of what a credit loss is. Okay, you should have an idea of how to calculate depreciation. Okay, those types of things. Okay, all right, so what is accounting?
Keeping records.
Correct. Why is it important?
You've got to keep track of everything.
Yes, making decisions is key. Okay, so accounting gives us information to make decisions. Where is it used? Correct. Okay, all businesses use accounting. All right, so do we need to follow the same rules? Yes, we do. Okay. All right, so when looking at accounting, this is key in terms of evidence of economic activity. All right, all forms of ownership, okay, need to present information. So it doesn't matter if you're a sole proprietor, partnership, CC, or company, you have to provide evidence to the owners and to other external parties. Okay, so to government in terms of SARS. Okay, government is going to want to see income and expenses to determine tax. Okay, historical performance, we're looking at past information. Right, so when we look at past information, we need to consider the financial year, which is how long? 12 months. Okay, so that doesn't change. Communicating information, we're looking at that language for doing business. Okay, so from last semester, I spoke about accounting being a language for communicating information. We're now getting better at speaking this language of finance. Okay, money, and representing it in terms of statements. Statement of comprehensive income, statement of financial position, and so on. Right, so who uses it? Everyone uses those statements. The most important reason why we use statements is for the decisions that we need to make that pertain to Those companies, okay, or the CCs. Right, so how much does a company pay as a dividend? We need to know how much profit they make before we can calculate the dividend. Right, a partnership. Okay, something we'll look at. That's the first form of ownership we'll cover. Okay, a partnership, how much does each partner get? How much are each of them entitled to? Something to consider. Alright, so what are the forms of entity? There's 4. Okay, we mentioned it. Sole proprietor, partnership, CC, and company. Okay. Just a bit of recap about the nature of accounting. Okay, you guys know my approach in terms of accounting. I keep it simple in terms of focusing on the elements. Okay, so in this module, you'll learn about other accounts, but they're still part of the 6 elements. Okay, so how many capital accounts did we have last semester? 1, 2, 3. How many do we have? Capital.
1.
Yes, capital was capital. We only had 1 account. In this module, you're going to see other types of capital. Okay, so capital for a partnership is called something different. Capital for a CC is called something different. But at the end of the day, it's still capital. Capital is capital. We can't change the nature, right, or the fundamentals. Those basic principles stay the same. Okay, and those are universal. You can study honors, further, masters, it doesn't matter. Okay, everyone speaks the same language. An asset is an asset. A liability is a liability. Doesn't matter how far you take it, it's the same thing to everyone. Okay, why? We're all using IFRS. Okay, so where do the rules come from? The International Financial Reporting Standards provide you with the basis for your accounting. Okay, the rules, the steps, etc. Okay, so why do we need to know the language? It's because of this financial reporting. Right, everything in this module is reporting. Right, so if you think back to FAC 1602, okay, what did you guys do? You looked at all the rules and then you ended with the financials, right? Okay, here we're starting with the financials and we keep doing the financials right till the end. Okay, it's all statements, statement, comprehensive income, it's all disclosure, disclosure, disclosure. Right, so if you want to know what the exams are going to look like, it's disclosure. Right, drawing up the statements but for different entities. Okay, so there's the note about the process. Okay, you should be familiar with this. There's the key. Right, you guys were looking at transactions, journals, ledger, and trial balance, while statements in 1502. That was the main bit. Okay, you did bank recon. All right, we looked at drawing up journals. We looked at posting transactions. We looked at creating T accounts. Okay, those were some of the skills that you've taken away from 1502. Okay, in this module, where do questions start? Questions start there. Okay, at the trial balance. Alright, so all of the above has been taken into consideration. Okay, so what can happen from trial balance to financial statements? Think back to your cycle. Your cycle is covered in the textbook and the study guide. Okay, it's mentioned as part of the introduction. What can happen from trial balance to statement?
Bank recons.
Okay, yeah.
Adjustments.
Yes. Okay, that's the key word, adjustments. Okay, you could do reconciliations and so on, right? But the main point that I was waiting for, which was that one, adjustments. Right, so sometimes you need to adjust certain accounts. Why do you adjust? It's because you want to make those statements more accurate. Not all transactions pertain to the 12 months. Sometimes transactions that are outside the 12 months pertain to the current year. Okay, so we need to create a set of financial statements that we can use for decision making. Right, so FAC 1601 is a prerequisite for the finance modules, okay, because you can't do finance if you can't read the numbers. Alright, so looking at decision making, this comes up a bit later, further on in your studies, depending on what type of BCom you're doing. Okay, what we're focusing on is this, the statements. How do we create the information for someone else to make the decision? Okay. Alright, so there's a note about all the types of businesses. Okay, we mentioned it earlier. Will the accounting be the same for all of them? Yes, the rules will be the same, but the disclosure, I didn't put a note here, let's type it in. Okay, rules are the same, but disclosure will be different. Okay, so the word disclosure refers to what? Yes, okay, presentation, layout, format, 100%. Okay, so all of those entities are going to be following the same set of rules. The only thing that will change is the disclosure, how we present the information. Okay, so a partnership will have a slightly different statement, okay, of, let's say, comprehensive income, okay, to a sole proprietor. Right, purely because there are certain transactions that are specific to a partnership that aren't specific to a sole proprietor. Okay, and the same thing applies to all the others. Right, so you guys are going to be focusing on those three. Okay, you're not going to be tested on a sole proprietor because you've been tested on that in the previous module. Right, so we're now looking at partnerships, CCs, and companies. That's what we're looking at. Okay, I've put a note here in terms of the separate legal entity. That's key because that's important from a law perspective. Okay, so you've probably done commercial law at some point in time. Okay, you normally look at legal entities and that type of thing to the background. Okay, you might go into detail about like the articles of association, etc., etc. Okay, here all we need to remember is, are they separate? Yes or no? Okay, so is a partnership a separate legal entity? No, they're not separate. So if they're not separate, what does that mean?
It means the owners are liable for any money that's owed or anything of the company.
Correct. Okay, and also if they're not separate, the owners are the business. All right. So can a partner transact with the partnership?
No.
They can, but that's a transaction with yourself.
Yeah.
Right. So you're a partner and you've got a partnership. Okay.
Buy something from yourself. Does that
Right.
make sense?
Well, can you take a loan from a partnership?
Yeah.
You
So
could.
run from-
Can you give capital to your partnership?
Yes.
Yeah.
You can. Okay. Can you take drawings?
Yeah.
Yes, you can. Okay, so those are things to consider, but it's not separate. So the business and the partners are one and the same. Okay. Is a CC and a company separate? Yes. Okay, so CCs and companies will continue long after partners change, directors change, employees change, doesn't matter. Okay, but CCs and companies will always exist. Okay, why? They're separate.
Aren't they ending CCs though?
CCs, they're not ending, you just can't register new CCs. Okay, so existing closed corporations still exist, and that's why it's still part of your accounting, because you might find CCs out there, okay, that are still CCs. They haven't grown big enough to become companies, and they don't want to list on the JSE to be a public company, so they're content being a closed corporation. Okay, closed corporations are treated the same as private companies. Okay, it's just their registration is slightly different. Okay, but you can't register a new CC. So in today's world, you can either go sole proprietor, partnership, or company. Those are the three options that you have available. Okay, and maybe non-profit, but non-profits aren't covered here. It was covered in the previous module. Okay. Right, so will these types of business follow the same rules? Of course. Okay, I'm stressing the rules for a reason. Okay, you need to know them and you need to know how to apply them. Okay, so I'm hoping after tonight you guys are okay with all the 1502. Just as a recap, just as a refresher. Okay. Principles in terms of recognition and measurement. Okay. In this particular module, the recognition becomes more of a consideration. Before, you knew you had to record everything. Right? You didn't really have to think, well, am I going to use this transaction or not? Okay? Does this transaction affect the statements? Yes or no? Okay, in this module, you will see certain transactions that are given as additional information, and you won't need to do anything with them. Okay, so recognition is key from a FAC1601 because you need to now judge whether or not you're going to be recognizing certain things or not. Okay, and recognition involves identifying whether something is short-term, current asset, or whether something is long-term, non-current asset. I'm just using one example, non-current and current. Okay, it might be something like, let's say, asset or expense. Okay, so stationery we know can be an asset if it's not used, but it's an expense if it is used. Okay, so that becomes more of a consideration, right? So in 1502, everything you were given was used. You never ever left anything out. Okay, here there is room for that. All right, so some things you don't use, some things you do use. It all depends. Okay. Disclosure is key. I can't emphasize that enough because that's how, okay, you'll draw up a solution for your exam. Okay, your exam is all disclosure. Cash flow statement, something we'll look at later, and the other three that you're familiar with. Income statement, balance sheet, and SOCI. Alright, those three you're very familiar with. It's the cash flow which is new, which you haven't looked at, but it is covered in this module. Okay, where do the rules come from? We spoke about it earlier. Just some background, some history. Okay, we've looked at that previously. Not important, just some background information. This is important. We've used this a lot in 1502. We're going to use it a lot this semester as well. Okay, but the accounts are going to be different in terms of names. Okay, so we'll learn a few different names for different accounts for assets. Okay, so you've already got a few assets. Debtors is an asset, right? Vehicles is an asset, right? Okay, so those are assets you're already familiar with. Okay, we'll look at other types of assets. We'll look at other types of income. Okay, so income can come from different sources, and you get different types of income. Okay, income we know is recorded when it's earned, not when it's received. Okay, because that's cash versus accrual. All right, a little bit of background again. Most important point here is this: the financial year. Okay, you're always going to draw up statements for 12 months. And you are going to have adjustments because you'll be given a trial balance that hasn't been adjusted. Okay, something that is quite important here in terms of disclosure is the understandability. Okay, layout. Okay, for certain types of businesses. Okay, and you'll see what I mean by that when we look at it later on. Okay, just to give you one example. Okay, in a sole proprietor, how many people do you have? One. In a partnership, how many do you have? 2 to 20. In some instances, you can have more for let's say professions like audit firms, lawyers, and doctors, and so on. Okay, but in most cases, we'll just say let's say 2 to 20. Okay, so in terms of understandability, do you think the statements have to be presented in the same way, okay, in terms of sole proprietor and partnership? No, they have to be different. Why? You've got more partners. So partners need to know what they're each entitled to. You can't just put one owner's equity amount and say, well, that's what the partnership is worth. The partners are going to say, well, what am I worth in the partnership? Or what am I entitled to in the partnership? Okay, partnerships aren't always equal. You might have 60-40, 70-30, 50-50, it all depends. Okay. Alright, don't forget the elements. In this particular module, this one is key. Equity. Right, the biggest change from 1502 to 1601 is the equity. Okay, so did you guys, or were you guys tested on the statement of changes in equity in your exam, if you can think back to last semester?
No.
Did this come up?
No.
Why didn't it come up? Because it was just one amount. It was just capital. Okay, you know owner's equity is what? Capital plus minus profit or loss minus the drawings. Okay, you'll see it on one of the slides. We'll recap that. Well, yeah, profit or loss would be the income and expenses. Correct, yeah. Okay, so you weren't tested on the SOCI. And the reason for that is there was only one amount that represented the owner. Capital. You know capital is what the owner is entitled to. Here, you have, just to take the partnership example, okay, as a discussion point, If I've got A and B running a partnership, can I draw one statement with one column for the partnership? I can't, because each partner will be taking from the business. Each partner will be giving to the business. Does that make sense? Okay, so you'll see the disclosure is key, and that's the understandability. So if you understand what type of business you have, is it partnership, is it CC, or is it company, you'll have a good idea of how to disclose the information. Okay, because what do I have for a company? Who are the owners?
Shareholders.
There you go. You've already got the answer. And we haven't even got to, what, chapter 6 or 7. Okay. Shareholders own companies. So the SOCI will look very different to a partnership because there aren't any partners, they are shareholders. Okay, now we'll have dividends and things like that. Okay. Alright. There are the statements that you're going to have to do. Is this relevant and important? Of course it is, and this is key for success in your exam. Okay. All exams require you to draw up those statements, and you'll always see the statement of change in equity. It's such a popular statement because it hasn't been tested before, and you're looking at different forms of ownership. Okay, so this is a big focus. Right, you will see statement of financial position, you will see statement of comprehensive income, but the main difference in terms of disclosure is for the statement of change in equity, because there are different types of businesses. Right, and this is a given. Okay, it will come up in your exam. It always comes up. You will, without fail, have a cash flow question in the exam. Okay, and before, you guys did bank recon, right? Bank recon was a standalone type of topic. Okay, we covered that in one session, and it didn't influence any other topics.
Yeah, they didn't even test it.
Did they not test it in 1502?
And I also meet you. I
I
learned
stayed
it so
up until
well.
3 in the morning, so many nights, just trying to
Shame,
wrap my
man.
head around this bank
Okay.
recon.
Yeah.
And I finally got it, and I was so pumped.
Pity.
I was like, they
Yeah, I was looking for that
Yeah.
recon question.
And I saw no bank recon.
Pity. That's disappointing. If they didn't test bank recon last semester, that's a real bummer. Okay.
Yeah.
And they
Alright.
even put multiple choice in the exam.
Okay, so maybe that might have helped in terms of being easy questions, right?
Yeah, there were only 5.
Okay. Well, at least maybe that made up for something more difficult.
They were pretty.
Yeah. Okay, good. All right, but this is a given, guaranteed. Okay, because it is only tested in this module. Okay, FAC1601 covers the cash flow and it tests the cash flow. It will. You can look at every past paper for the last few years. It is going to be in there. It has always been in there. And I've spoken to some of the students from last semester already that passed this course. Even they told me the cash flow is in there. Okay, it's always in there. So that is like your bank recon type of question, but it will come up. There's no doubt. Okay, and it's a standalone. Cash flow is standalone. It doesn't affect any of the other chapters. Right, you can actually do the cash flow already because you guys have an idea of what income is and what expenses are. And you know bank is a cash item, right? Bank represents cash. So with cash flow, we're looking at movements, okay, in cash, right, or funds, money, right? And it's as simple as that. So when we did a bank recon, we were looking for the bank balance, and we were looking at movements in cash, receipts and payments. In the cash flow statement, the same thing is going to apply. It's a search for bank. Okay, bank is your account that represents cash. We're literally going to be drawing up lots and lots of these T accounts, T accounts, T accounts, T accounts, time and time again to find bank. Okay, so that's why I say this is key. Because if you don't know how to draw up a T account, you're not going to know where to find bank. Okay, because bank could appear in all of those accounts. Bank can appear in an asset account, bank can appear in an income, an expense, a liability, capital, and drawings. Right, and that's your challenge. Your challenge is trying to find bank when doing a cash flow statement. Okay. Alright, there's the note about disclosure. I just mentioned it earlier. Key in terms of exams and past papers is knowing how to present and structure your answer. Alright, little bit of assumed knowledge from prior semester. Okay, there's the note. You guys have all done 1502. Okay, you've looked at basic universal principles, right? Which are debits and credits, which are things like timing. Okay, we can't change that. It doesn't matter if I've got a CC or a company. A debit is a debit, a credit is a credit. The rule must apply. Okay? Depreciation, also something that doesn't differ in terms of forms of ownership. Whether you're running a private business, whether you're running a public business, okay, in terms of company, or whether you're running CC, partnership, or sole proprietor, depreciation is depreciation. Can't change that. What is depreciation? It's an expense. Okay. Alright, so let's see how much of FAC to 1502 you can remember. Can you guys remember what financial position is?
Assets classifies equity and liabilities.
Yes. Okay, good. So you're giving us the accounting equation. A equals O plus L. Financial position is looking at the A and the L. Right, that's the focus for financial position. Right, how do we measure it? Well, it depends. Okay, remember assets change value. Carrying value would be how I would measure property, plant, and equipment. Okay, carrying value. What's the current worth of the asset? Okay, how would I measure the value of a loan? How do I measure the value of a loan? I look at the balance outstanding, okay, or the current amount owing, okay. Right, how do I measure inventory? Well, you would take stock to count the closing stock, but how do I measure it? Do I measure it at cost? Yes. Okay, remember historical cost. When I buy stock, it costs X, and I include all the additional costs with buying inventory. Same thing with buying a vehicle. It's historical cost, but then you depreciate it. Okay, so measurement can differ. Okay, when do we measure this? That's important. Which is one point in time. Good. Okay, so do you agree I can measure financial position at any point in time? And this is a key concept to remember, because let's say you guys are running a partnership. Okay, Nicole and Anthony working as a partnership. Okay. What happens if you decide to add a new partner? So now I'm going to join your partnership. Alright, you would have to determine the financial position at that point in time, because the two of you have been running a partnership, okay, offering a product or a service. Now I want to enter the partnership. I'm going to have to pay to get into your partnership. So I'm going to contribute capital to your partnership. You need to tell me, well, if I want a third of your business, so a third, how much does a third cost? Right, you would be able to tell me because you would know what the financial position is. Okay, and that's why we need to know what requires or what we require to work out the position. Okay, when working out position, you need to look at this and that, A and L. That's the biggest bit that you need to remember from financial position. Okay, there's the equation. You gave it to us earlier. Just remember, owner's equity comprises of 4 separate accounts: income, capital, expenses, and drawings. Okay, the two affected directly. So if income and capital go up, owner's equity goes up. If expenses and drawings go up, the owner's equity come down. Okay, so inverse and direct, okay, in terms of relationship. Alright, there's the definition. Right, so when we learn about new assets, I'm going to use the same definition. I can't change the definition. It's given in the International Financial Reporting Standards. Right, so it doesn't matter where in the world we go, as long as that particular country is also using the same standards, we'll all have the same definition for an asset. Okay, so don't forget those definitions. Those are basics that you will always apply. Okay, as I said earlier, doesn't matter how far you go with accounting, it will always be broken up into its elements. Okay, it's basic principles. Okay, all right. Do you remember the difference between non-current and current? How do I know if something is non-current? Non-current. More than 12 months. Okay, so greater than 12 months, less than 12 months. Okay, if you think back to last semester, this wasn't much of a consideration in terms of time because it was more the type of asset. So you know debtors was current asset. You know property, plant and equipment was non-current. Okay, in this module, you're going to get an asset that could be both. Alright, and I'm going to give you an example. Okay, let's talk about a loan. What type of account is a loan? A liability. Do you agree the loan can be paid off in one installment or paid off in several installments? Okay, so what happens if I'm going to pay off the loan over 12 months? Or let's say 24 months, just to make it a bit longer. Okay. If I pay off the loan over 24 months, so I'm going to be paying off a payment each month. How many payments do I pay in total? 24. How many of the payments are less than 12 months? How many payments are more than 12 months? 12. Alright, so the loan is going to be paid. Correct. That's what I'm trying to get at. You're going to have to split it. Alright, and half of it is current. Correct. If you want to get both marks, you have to show it separately. Alright, you can't just show a loan, non-current, 24 months, whatever the amount is. Okay, you would have to show half of it as non-current because half of it is paid over 12 months. The other half is paid over the next 12 months. And there's the distinction between less than 12 months, greater than 12 months. Okay, is that alright? Well, we will see examples, so don't stress too much about it now. Okay, but I'm giving you guys all the key points, right, from 1502 that you need, that you use a lot in this chapter, in this module. Okay.
Question.
Sure, go for it.
We obviously can't write our exams here this semester. So we got to read
no, all unisa stuff is gone. Okay, so yeah, this venue here, as far as I know, is going to be used for martial arts or something separate. Okay, they're doing some other things. Okay, there's going to be some renovation here, I believe. Okay, they're bringing in some other Boston-related courses. Okay, but y'all, unisa stuff is the end. Okay, unfortunately. Okay, all right. Okay, so that was just one example. The same thing can happen for an investment. Okay, some of it can be paid out over 12 months. Some of it can be paid over a longer period. A portion can be long-term. A portion can be short-term. Okay, and that's a key distinction that you need to make in terms of disclosure. Okay, you guys probably use this a lot when you didn't have certain figures. Okay, incomplete records. Okay, that was the final chapter in 1502. They probably didn't test it. Okay, because you're going to use it here. Why? Missing figures. Okay, and you see this quite often. Right, because you're going to be given a scenario. Alright, so in this particular module, you'll see every question is separate and every question is given almost like a story. Right, they give you a bit of a background. So they tell you what form of ownership the company or the business is, okay, company or CC or partnership, okay, and then they give you a trial balance, which you know you're going to get. They start trial balance and you create the statement. Okay, what they do is they often give you question marks here and there. Okay, one or two amounts you need to work out. Right, because that tests your understanding of your basic accounting equation.
It was actually in the test, if I think about it now, in the one trial balance that they gave, there was a question mark in what the equity figure was when you were doing.
Okay.
So you had to take the totals of both.
To work it out. Good.
No,
That might have been the assignment. I know the assignment we had one like
that.
that.
The exam.
Also the exam.
There
Okay,
was
great.
one where you had to work out what the
Missing figure was.
Yeah, I think it was capital or something.
Okay.
Was a missing figure.
Alright, so you would have used that, eh? Great, so then you would have got it right. Nice. Okay, so all accounting transactions will always be recorded twice. Okay, and now I'm looking at disclosure. Right, so let's talk about a simple transaction. if the owner gives capital to the business in the form of cash, which accounts will be affected?
Bank and capital.
Debit which account?
Debit bank and credit capital.
Good. Okay, that's the working. Remember, workings are key because that gives you the disclosure. Right, everything in this module is disclosure. So you would start there. That's what you've identified. Now we need to know, bank is what? Assets. So where does it go? Statement of financial position. Okay, so that's more important. It's where do you disclose the information? Okay, because you're not always going to be asked to do all 3 statements for each business. Okay, they'll give you a 20-mark question and they'll ask you only for the statement of financial position. So you would only be looking at that half of the transaction. Okay, if they asked you about capital, what statement would they be asking you for? Correct. Okay, and then you would focus your attention on that. Alright, so double entry rule still applies, but the key is this. Okay, do you know where to put those accounts? Okay, because as I said, you're never ever going to get one question with all 3 statements. You'll get a question asking you for one of the 3 statements. Right? And then you need to focus your attention on what do I need to draw up that statement. And that's when you ignore some of the other information. Okay, before everything you were given, you had to use. Here, you can be given information that you're not going to use. Right? It's application. Okay, they're taking it a step further.
I kind of did that in our exam. I recall the one question that's I think it was the financial position one.
Okay.
Because I was used to word problems.
Yes.
The
bullets.
Card, depreciate the card. And they just threw T accounts. They just
Okay.
threw T accounts. And T accounts are
All right.
worst. I hate them.
Yeah. So it sounds like some of the exams have changed slightly. All right, that's always good. It's always good to update and keep the information relevant and change the questions. Right. So yeah, that's something that you would have considered in terms of disclosure. You wouldn't have disclosed capital in the financial position.
Yeah,
Right.
because they gave us all the T accounts and they said, so capital drawings, all of that, and they said do the financial position.
Yes.
Okay.
Yeah, the question was just like 6 pages of T accounts.
Yeah.
And
Wow.
You must put that
Put
down.
them where it needs to go.
There was nothing, and they said just
So
do
that's
the-
good.
do the
So-
financial position.
Yeah, that's
There
good.
was- And there were
That's
certain
good.
things where,
Like asset
yes,
realization and all
that
that
was
stuff.
part
Okay,
of
nice.
it. Yeah.
All right, well done. So see, you guys can do that already. Okay, you just wrote that last semester, so that's great. I think it's good that you guys are doing the one after the other. Right, I've had students in the past that have left this for the end. Okay, so they've done all their management degrees, all management classes, HR, all of that stuff, and they leave the FAC1601 right to the end because they hate the subject. Okay, and it's difficult because all of this they would have covered like 2 semesters ago, 3 semesters ago, sometimes even a year or 2 ago, and they don't know these basics. And now to try cover the basics and then still cover the new work, it's very difficult. So now you guys have just written the exam, you're even talking about the exam paper, and you've identified something you did. I remember I did this. I looked at the T account and I put it where it needed to go. So you can already do that. That's great. Okay, so that's what I'm trying to achieve with this. It's like a refresher to make sure you guys are all right with what you did last semester. Because it's last semester, it's nice and fresh, which is good. Okay. All right, guys. Don't worry too much about the basic disclosure. We'll look at each form of ownership separately because you'll see the statement of financial position is slightly different, okay, for different forms of ownership. Okay, but you don't change the basic headings. Okay, so this stays the same, this stays the same, this stays the same. It's just under each of these you're going to see a few different accounts. Okay, so you can't learn a template. Okay, you can't study, okay, this is a template for a CC. Okay, you need to know this, and then you need to think about, okay, I've got a CC here. If the CC contributes, or if the member of the CC contributes capital, capital is equity. Okay, it's called something different. We'll cover it when we get there, but that would be disclosed under equity. Okay, and then like loans to members, loans from members. I'm just mentioning a few things we'll see later. Can a member take out a loan from the CC? Yes, because the loan is separate. Okay, so you guys are working for companies. Your companies could give you a loan. Are you separate from the company? Yes, so they would have to record that in their books as a loan to each of you. Okay, is that all right? Great. All right, let's see how much of this you remember. Financial performance. So you answered position. Let's see if Nicole remembers performance.
There's not a good chance I do remember.
Try. Just try. Go for it.
Hope you do, I don't want to answer.
Try.
Financial performance. So it's how well the company's done.
So how do you measure that?
What is your owner's equity?
Almost. That's it. Yeah. Okay, so performance is exactly that. How has the company done in terms of performing? Okay, so just think about performance. Performance is your operations, ops. Okay, so your companies measure your performance by what you do, your output. Okay, and then they either say, well, good job or bad job. Okay, and performance can't be measured at a point in time. So your company's not going to say, well, you did badly today. Right? They don't do that. They look at, well, how was your year? Okay, if you're in sales, they look at that. Okay, if you're in other areas, they look at the time period, the year. Do you agree? Okay, so performance is measured over a period, and how do we measure it? It's the income and the expenses. All right, the difference between the two gives me the profit. Okay, so maybe let's just write profit at the top there. Okay, but we've looked at this before, just a bit of recap. Profit is what? Income minus expenses. Who's entitled to it? The owner. Income is earned and expenses are incurred. Okay, so if I use the water and lights, I won't be billed for it on the day, I'll be billed for it at the end of the month. Okay, and that will be paid separately. Okay. Over a period, we spoke about that, you can't measure performance. You can't say today is a good or bad day because we haven't finished it yet. Okay, ask me tomorrow and I can comment. Okay. Alright, and there's the definition. So again, we'll learn about other income, other expenses, but it still has to meet those definitions. And you know it must be disclosed in the comprehensive income. Okay. Something else to consider is this, assets and liabilities. Right, because you will see other assets, other liabilities. Then just think about it. What do I get from an asset? Income, normally. Okay, not always, but normally. Some assets actually create expenses. And what assets are they? Yes, assets that are used. Okay, depreciable assets. Okay, good. Right, and then again, don't worry too much about this as a layout. Just have a general idea of what those statements look like. Okay, because as we go through the different forms of ownership, you'll see different line items for each of the different types of businesses. Okay, there's a note about capital and drawings. Capital is capital is capital. That was last semester. This semester, capital is going to be a few things. Okay, but it's still going to have a credit because C for capital, C for credit, and drawings will still have a debit. That doesn't change. Okay, we'll learn about other capital accounts. So remember those 6 rules? We had assets as one of the elements. Do you agree we've got lots of different types of assets, yes? Okay, so think of an asset quickly. Bank, vehicles, inventory, great. Okay, are those assets? Yes, but they all have a different name. Inventory is a name for an asset. Do you agree? Okay, so capital is now going to be split to different accounts. Okay, so we'll have one account called capital for partner A, or partner A capital, capital A. All right, and that's a capital account, but for a partnership. And we'll learn about other ones for different forms of ownership. Okay, there's your note. I asked you, or I mentioned it earlier. I told you what the equation was earlier. Owner's equity, capital plus minus profit or loss, minus the drawings. Remember, profit is the income minus the expenses. Okay, the difference between income and expenses gives you profit. Right, and that's why equity is those 4 accounts. The C, the I, the E, and the D. Okay, and we saw that earlier when we looked at the accounting equation. Right, those 4 make up owner's equity. Okay, there's the rules again. Don't forget how important they are. Make sure you know where to put what. Alright, so where do these 2 go? Good. Where do these 2 go? Okay, comprehensive income. Where do these 2 go? Correct. Statement of changes in equity. Okay, notice cash flow isn't here. Why? Cash flow is all of them. Okay, and that's why I say cash flow is a separate standalone chapter, because cash could affect an asset, cash could affect income, cash could affect capital. Right, you could receive capital in the form of cash. Okay, the 3 that you need to know well would be these 3, because each form of ownership will have each of these 3 statements. Okay. Alright, I will give you guys a break shortly. Let me just check how we're doing. Okay, no, we're doing right. Alright, great. Okay, so let's just wrap up 1 or 2 more things here before I give you guys a quick breather. Do you guys all know how to use this account? Yes. Good. Okay, what is a T account? It's a separate account for each individual element.
I just don't really understand how to do the folio thing.
Oh, alright. The folio is like debtors journal, creditors journal. Okay, where is the amount coming from? Okay, yeah, that you'll never ever have to reference, yeah. Because in today's world, everything is done electronically. Okay, so the system references it for you. Okay, you insert the account and the figure, and it updates itself. It pre-populates everything. Okay, so in the past, it was very, very important to know where those things came from. All right. In today's world, the system normally tells you this is a receipt or payment. Okay, and where it comes from. Okay, so don't worry about the folio. It's more the debits and credits. All right. So how do I affect the account? Does the account go up or does the account go down? Okay, let's see how many of these you can recognize, guys. Notice I'm recapping this. Trial balance. Okay, so trial balance is just a list of accounts. We know that. Okay, are you going to have to draw up a trial balance? No. Your job is to know what's given in the trial balance. And sometimes that trial balance is a mess. Okay, you've got like assets at the top, income somewhere in the middle, capital right at the bottom. It doesn't matter what it looks like. It's just a list of accounts. Okay, you need to know what is it and what balance will it have. That's key. Okay, so for each of these, I just want you to tick the correct column. Okay, so let's do land and buildings together. What is it? So what balance? There you go. That's the answer. Alright, so if you know what they are, you should all be able to get the right balance. Okay, and you'll always need to know what the balance is because it's your job to create the statement. And you can't create the statement if you don't know if it's a debit or credit.
Stationary expense or stationary asset?
Okay, if it's an asset, then what words we have there? Stationary on hand. Okay, if it's just stationary, then it's an expense. Okay, so quickly tick the correct columns, debit or credit for each of them. Sales, debit or credit, bank overdraft, debit or credit, which balances do each of those have?
What's it called, the online trading course.
You're more than welcome to attend it. First Friday of every month for the next 3 months.
Do we come with laptops or anything?
You can bring a laptop if you want. I'm going to give you notes. Okay, and we'll discuss that. It's introductory, so I'll show you a few things. Yeah.
Are you going to offer more courses on that?
Well, it depends on feedback, but it's just free. It's just something I That's something I want to do. So I just thought, because what I've asked Boston in the past to do is other universities, okay, offer the JSE challenge, okay, where students, so you guys, would be able to enter that competition. And that was an idea that I asked them to consider, and it never ever happened. Okay, so now, because I can do things, okay, I'm the decision maker, I want you guys to, if you're interested, to try enter that competition. Okay, the JSE challenge. You guys are students, you have the option to register and participate in that competition, JSE online challenge. Okay, at schools, there's a schools challenge for schools, so high schools. There's a university challenge. Okay, I encourage you guys to consider it. So if you're interested in that, great, we'll talk about that, because I do the finance and investment modules. You've seen my list of accounts. That's what I like. That's my passion. Okay, so I am offering that just as a extra. Okay, so attend if you can. It's free of charge. It's information. Yeah, it's a 3-hour session, and then we'll do quite a bit. Okay, all right. So yeah, great you mentioned that. Okay, next week Friday. Okay, all right. So Nicole, sales, 100%. Anthony, bank overdraft, good. Okay, sales is an income, and overdraft is a liability. Okay, just mention the element as well. Okay, stationery, Nicole. No. What is it?
Debit.
Why?
Because it's expense.
Correct. Okay, stationery is an expense, that's why it's a debit. Okay, so just remember those steps. Okay, step 1 is, what is it? Step 2 is debit or credit in terms of balance. Okay, we're not looking at the effect because there's no transaction. I didn't say stationery was bought on cash, so there's no effect, increase and decrease. Okay, loan? Why? Great. Debtor?
Debit.
Why?
It's an asset.
Good. Vehicles? Good. Creditor?
Credit.
Why?
It's a liability.
Good. And interest income, there's the keyword. Income, credit as well. Okay, great. So you guys all know where to put those balances. Right, and why is that important? Because you'll always be given a trial balance. Okay, just look at any past paper, you'll see trial balance are popular. They come up often because it's data, it's information. You adjust, you change it, and then you post where it needs to go. Okay. All right, so how long is the reporting year? We spoke about it earlier. 12 months, perfect. Do adjustments need to accurately affect the transactions? Always. Okay, so those are some of the adjustments. Okay, revision slides. Okay, you guys have all the answers in 1502. I'm recapping it because you are going to see these adjustments again. Okay, guaranteed. Look at any past paper. There's going to be prepaid expenses. There's going to be accrued expenses. There's going to be other. Okay, so let's ask you guys to fill in some of those blanks. What is a prepaid expense? Yeah, you've got the definition. Yes. Okay. Okay. Sorry, I should have been more specific. What element is a prepaid expense? Current asset. Good. Okay. You're creating an asset. Right. So if it's a current asset, it will be part of your statement of financial position. Okay. So prepaid expenses go to the statement of financial position under the current assets. Okay, perfect. So you mentioned current assets. That's key. Okay, I don't only need to look at the asset, I also need to look at where do I disclose it. That's actually more important. Okay. Hi, Ricardo.
To disturb,
No problem.
So what time am I going to be in?
Until you guys close. I'm going to actually end before then. Yeah, so don't worry, I've spoken to Greg about...
Cool.
Yeah, so don't stress. Thanks, Ricardo. Okay. All right, so prepaid expenses is a current asset. It goes under the statement of financial position. Okay, so if I know it's a current asset, I know it has a debit. Okay, and that's all the why, right, which you guys should be familiar with. All right, why do I credit the expense? The expense is overstated. Right, if something is prepaid, you've paid too much. It's not payable this year, it's payable next year. Okay, i.e. it's due next year. Okay, is that right? Great. Accrued. What is it, guys?
Liability.
Yes. Okay. Accrued expense is a current liability because it hasn't been paid. It's the opposite of a prepaid expense. Okay. Statement of financial position, current liability. Okay, pretty easy, hey? Right, as long as you know what they are, you'll see it is as easy as that. Okay. Alright. Accrued expenses, liability. Just to understand the expense part of things, why do I increase it? It's too little. It needs to be increased. It's understated. Okay. I should have paid, but I didn't. I'm still owing an amount. Best example for accrued expense, water and lights. It's billed after you've used it. Is that all right? Great. I'm just going to finish the adjustments and we'll take a break. Okay. Consumable inventory. Okay, now we can talk about what you mentioned. You spoke about? Stationery. Good. Okay, so stationery is an expense. I buy stationery, but I don't always use it. Okay, so if I don't use all my stationery, I'll have an asset. Current or non-current? Correct. Okay, so again, disclosure is key in this module. Statement of financial position, current asset. Okay. Alright, then you've got an adjustment. Again, if you want to put the Y, right, you haven't used all your inventory, you haven't used all your stationery, and that's why it's considered stationery on hand or inventory inverted commas. Okay, so the asset that you have on hand, you would use the expense. Right, next one. Are you guys happy with this one? Great. What is this? Why?
Because you owe people work.
Correct. Okay. You haven't earned something. You still need to render the service or provide the product. Okay. So this creates an obligation. Okay. Liability. Non-current to current?
Depends on how far in advance you've been paid.
Good point. Okay. Current liability normally, okay, but it could be longer term if it's longer than 12 months. Normally it's shorter than 12 months, okay, but you do need to look for those key things. Right, luckily we don't see long-term income received in advance. Okay, people don't often pay, let's say 24 months in advance. Not to say you can't, it's just not something that unisa will give you in the past period. We've never seen a long-term income received in advance. Not to say you can't get it, so your point is very, very valid. Okay. Alright, so income received in advance, current liability, statement of financial position. Okay. The Y, one is overstated, the one is a liability. Okay, what is this? Correct. Similar to debtors, so it must be a current asset. Okay, so here you need to recognize more income because you've done something and you are entitled to it, but it hasn't been received. Okay, so I give someone a product, i.e. I'm selling to them on credit basically. Okay, same thing applies here. Very, very similar to debtors. That's probably the best way of remembering what accrued income is. Just think about it like a credit sale. Okay, so understate, i.e. recognize more income. Okay. Next one. Do you guys remember what this is? Credit losses. Good. Okay, it's a loss. When you lose something, it's an outflow of benefit. Okay, do you see how I'm using that definition? Okay, so even if I didn't know what this was, I can just think back to my 6 definitions. It's definitely not an asset liability. Okay, it's either an increase or a decrease in benefit. Right, I'm writing off debtors, I'm losing something. There's the answer, expense. Okay, so no payment will be received. You're writing off bad debt. Okay, if you want to, you can motivate it a bit more. I've tried to do that here. So debtors will be credited because the asset will decrease. Okay. You don't have to go that far with the explanation. As long as you're comfortable with credit losses being an expense, that's the key. Okay. All right, then I think I've got one more, and then we'll take a break there. Okay. You guys might be tired, right? Is that right? Okay. What is this, guys? Good. Why is depreciation expense? You're losing value, yeah, of the asset, correct. Okay, if I define depreciation, it's the use of the asset over time. Okay, I'm going to revise this again when we look at PPE. There's a note about that in the slides. Okay, but I've just mentioned it here. CV is carrying value. Right, how do I calculate it? In case you forget, okay, cost minus accumulated, yeah. Alright, so you can't forget all the depreciation. We will look at the workings again after the break. I think that was the last adjustment. Okay, I think I've just got a summary slide and that wraps up that bit. Okay. Alright, guys. There's a summary. I've given you the complete answers there in terms of I actually tested you on this last semester, so it's given to you completed here. Okay, I'm not going to cover this now. Let's take a quick breather, right, and then we'll continue where we left off. All right, guys.